The Indian economy's growth recovery remained on track in Q4 FY23, led by growth in services. GDP is estimated to grow by 5% in the January-March 2023 quarter, a modest step up compared to 4.4% in the previous quarter. This is according to a Bloomberg poll of 44 economists. GVA is expected to have grown by 4.9% compared to 4.6% in Q3. For the full year, GDP is set to expand 7%. Now let's have a look at some of the key components and how they're expected to have fared. Agricultural GVA. Higher acreage, early sowing, healthy reservoir levels, and improved availability of fertilizers are likely to have helped Rabi output in 2023, according to a research note by ICRA. But unseasonal rains are likely to have dampened yield of some crops. Industrial GVA is expected to have improved, with manufacturing GVA likely to have registered a growth after contracting for two previous quarters, this time benefiting from higher volumes as well as lower margin pressures. Domestic demand for services continued to outpace demand for goods. Services exports remained surprisingly robust amidst a contraction in merchandise items. Now moving to expenditure trends, consumption recovery was supported by urban areas, but rural consumption is now showing nascent signs of recovery as real rural wage growth turns positive. The drag from net imports is expected to be lower, with reduction in trade deficit and a surge in services surplus. Capex cycle recovery, which depended on central government expenditure so far, got some support from pickup in state government expenditure and an improvement in capacity utilization. This is according to a research note by IDFC First Bank. GDP figures for India are set to be released on Wednesday. Stay tuned.